All right, everyone, give me a second. As I always like to start off these podcasts by saying, we got to make sure that we're streaming properly on all these various accounts. Hopefully, there are still some people on X that have not moved to Blue Sky, given what's gone on with Trump. As we're live on X, YouTube, and all the various platforms, if you are watching this live, you want to ask a question, I can see your comments, I can see your posts, which means just go on whatever platform you're watching this on. I'll try and bring your questions up as they come up. I'm going to very quickly refresh my screen because it looks like I'm blurry on my end. So give me a second, folks. Hold on, Porter. Okay, that should be better. All right, and as I was saying, so if you're watching this and you want to ask a question, don't hesitate to put it on whatever platform you're on. This will be an edited conversation under Lead Lag Live. I am excited for Mr. Porter Collins. I've had him on a number of these spaces on X before. This is the first time we're doing face-to-face, so you're going to see both of our lovely faces here. Talking about the Trump trade and what the hell happens next. So with all that said, my name is Michael Guyette, publisher of the Lead Lag Report. Joining me for the rough hours, Mr. Porter Collins. Porter, I know a lot of people are familiar with you and they've tracked you over the years, but for those who don't know your background, introduce yourself. Who are you? What have you done throughout your career? And what do you do now?
I'll give the very quick rundown. I've worked in finance for roughly 25 years. Probably definitely most famous for my role in the Big Short with Steve Eisman, Vincent Daniel, Danny Moses. We ran our own hedge fund for a bunch of years, and for the last, I would say, 6 years, myself and Vincent Daniel have run just our own family office, and we've had lots of opportunities taking money, and so far, thankfully, we have not, and having a lot of fun doing that right now. Obviously, don't take any of my views as investment advice. I thankfully am not as serious as most people on here because I am running my own money. I have a lot of free will to say whatever I want, so it's kind of fun that way.
So as I've seen from your prior interviews, it seems like you were fully expecting Trump to win, and pretty overwhelming as far as that goes. I thought a lot of the market movement had priced in a Trump administration, but that doesn't seem to be the case. What's gone on since the election that's been surprising to you?
You know, let's rewind the clock. I mean, I don't know that I don't know that we necessarily knew that Trump was going to win. I think we had a good indication that he was probably going to win, and um, that was going back to our CNBC interview in June, which we really thought he was going to win. I've learned over the years to take politics out of my investment views because it's really dangerous, and I've seen it, and I've done it, I've witnessed it, been part of it. You can't have a political opinion doing this job and be totally objective. And so there's so many hot takes and so many biases, and so just trying to remove that was very helpful for us this election. I'll take two trades which are pretty indicative of that. If take Geo, the prison REIT, and Fannie Mae Securities, which is probably the two of the bigger Trump trades. And if you just thought that both of them, then if Trump were elected, we're probably going to double. If he wasn't get elected, we're probably down 30%. I mean, Geo was already operating in a Biden administration, so whatever you saw the last year or two was probably going to be what was going to happen going forward. So that you're already, besides sentiment being taken out, your fundamental downside was already in the stock. And so and if we thought Trump was going to win 60-40, just the math alone told you should be long these stocks. And thankfully, we were long the stocks, and we're setting up for the next round of Trump trades. The best part about being in my seat and trying to be fully objective to everything that's going on is you can see a lot of the hot takes and um, a lot of the biases about market participants of what's going on, and you can see, you know, the MAGA folks have really come out. right now, and now they're beating their chest, and they're very confident, and they fully believe Elon's going to take $2 trillion out of the federal spending, and things are going to go to the moon. And so I think that we're pretty balanced about things, and trying to be look through specific ideas, longs and shorts, and I can go into that in a little bit. And we sort of did the same thing when Biden won, and we were talking about my partner Vincent has a great line about from the movie Casino. He loves, obviously, all mob movies and Italian takes. And so there's a scene uh, where they're talking about there's this guy, De Niro's character, I forget, Ace, is wants to fire one of the guys working for him. And Don Rickles' character comes up to him and says, "You can't fire him. He's the commissioner's cousin. He's juiced in." Right? And so he fires him anyway, and then obviously the Nevada commissioner comes down on him. And so the concept of juiced in works in both Democrat and Republican regimes, and you can't fight that, right? And so if you look about, you just take a step back and look who's juiced in into the Republican administration. Obviously, the top of that stack, not here, but sort of way high above everywhere else, is Musk. And so if you thought, as much as I historically dislike Tesla, as much as think he's juiced in, you couldn't be short the stock into the election, right? And nor can you be shorted here. It's sort of like, yes, the tax credit went away, but sure enough, the grifters come around, and you knew he's gonna win somehow. And then you go back to the number one contributor to Trump's campaign, besides Elon, was Geo, the prison REIT, right? He was at Trump's. Just look at these pictures on the internet of who's next to him, who's around his table, right? Lutnick, right? Public company, BGC, which we've owned for a while. Ackman is very pro Trump. Paulson. I don't know if you watched the UFC fight this weekend. Did you get a chance to watch it?
No, I saw the clips that were going around. Yeah.
Okay. Sitting next to him
Yeah.
was the head of
Saudi, right?
the Saudi, right? The Saudi PIF, right? And so and then Mark Roman from Apollo's name now mentioned in the at least running for Secretary of Treasury. And so you put all these things together, it's like, where do I not fight, or where can I possibly benefit from that? And so that's how we think about things. And we did the same thing with the IRA under the Democratic regime and stuff like that. And so uh, I think it's good to frame that stuff of which side you want to be on, or just don't fight it, because it's a 4-year trend, possibly 8-year trend. If you don't want to fight this stuff, and figure out ways to which you can win. So that's how we were thinking about things.
On the Tesla, as a potential short, is the simplest answer the right one, which is whenever the bromance ends, that's when you want to actually short
Yes.
Tesla.
Yeah. We went to a Robinhood conference, and like about a month ago, and I put it in the pile of too hard, right? I see that the earnings, the valuation never makes sense, but like, you can't fight this. So like, just leave it alone, walk away, and when the fat pitch comes, you can take it. But otherwise, in the meantime, it's the number one meme stock. It's the king of the memes, right? And he's king of the world right now. So I'm not gonna fight that.
I recall maybe a year ago or so when we last spoke, you had some fairly decent exposure to China.
Yep.
Correct me if I'm wrong on that. Okay. I'm
Well, I
curious.
mean, we had China exposure. I don't know, decent amount, but when we caught that stimulus move, which was a good one, sold it, and sort of working our way back at it now. It's one of these things that, in my idiot value mindset, if you look at just we have all these screens, and they show up all the time on our it's so cheap screens. And so if you sort of think about that and trying to figure out, listen, I think China is going to stimulate, and that they're going to try to stimulate domestic demand. And if you think about, hey, who's the Amazon of China, you go to Baba and JD. And so that's how we're thinking about it. I don't think it's going to be hard to see them build ghost cities again, right? So they're going to have to do something different this time.
I want to revisit China, but first I want to go to some questions from the audience, those that are watching live. This one, any color on the GSE preferreds? Anything on the horizon that would force administration action?
Well, that's, if I think about our two biggest Trump trades, number one was Geo, right? The prison REIT. And I think you see it in every today. Trump came out and said we're going to use the military, right, to do this stuff. And I still think that that is the number one name, which it's straight inject Trump MAGA trade into the veins, right? It's they have the monitoring business, they have the deportation business, they have the prison beds themselves, and they monitor roughly I think it's 185,000 detainees right now. They monitor them through either an app that you check in every day, or a wrist bracelet or ankle bracelet. And sorry, I'm getting away from the GSE question, but you know that number, there's something like 8 million illegals in this country, and there's a couple articles going around, well, we could monitor up to 5 million people. So just think about the magnitude, and no one has that, and no one has even doubling in their numbers. And so you know that's how I think about things. And so it's very high margin business. And so we're along that stock. We had calls. I actually let the calls uh roll into equity, and we're gonna keep riding that train. So on the GSE preferreds, that's easy, right? In the pile of it starts to get harder are the GSE preferreds. And so, in full disclosure, we owned the GSE preferreds last time, and Trump cut everyone at the knees, right? And so we in 2020 we had a fantastic year going, and I think right at the end, he swiped 10 to 20% off our performance when he didn't do anything. So they Fannie Mae's really cleaned up the balance sheet, generated a lot of equity. These are very profitable companies. They have a monopoly of monopolies, like the biggest monopoly in the history of the world they have. And so they're extremely profitable, and the government, call it, owns 93 to 95% of the equity. I think that Trump's going to use it as a war chest. He's going to release them eventually and say, look how much money I made, right? I made this money for you. And we're talking about the GSE sliver of the preferred stock of how much they own. So it's either going to be, we all sort of think they're probably going to convert the preferreds into equity, or payment. I don't know how exactly they're going to do it, but they're going to be part of the capital structure. Or no one knows, I should say, no one knows exactly how they'll do it. I don't think even the government knows it at this point. So, there's still the GSE prefers are still trading at $10, which is on a $25 par. There's still, I think, a lot of upside, and especially if they do convert them into equity. And so we're still playing that.
For a playbook on how to invest, is there anything different about the next 4 years that would make it not the same playbook as Trump's first term? Meaning, certain sectors as outperforming or anything else like that?
Um, Listen, I think that he has his feet underneath him probably more so than last election, and you can see it in terms of the stuff he wants to get done. He has a pretty big agenda, and a pretty big and a much bigger mandate this time. And one of the reasons that we were more confident that Trump was going to win this time is that there was a lot of people who were scared to vote for him, right? Scared to admit they were going to vote for him. And you saw the sort of the wave of that coming and say like, yeah, this guy's not that bad. And so now he has a full mandate to do stuff. And so one of the things that no one discloses their shorts except for guys like Vincent and I, but we looked we looked at um, whether you believe the $2 trillion number or not. You look at the biggest beneficiaries of sort of the gluttonous activities of the Democrats over the last you know X amount of years. Even the Republicans, a lot of gluttonous fat that is just pumped into companies. And you can see what percentage of certain companies come from the U.S. government. And so we just took basically everything that had, not everything, but who had 95% of their income streams from the government, we shorted. And so, I think they're going to, I think they're going to cut a lot of stuff. And I think that, one of the things is that you look at the healthcare industry, and you go on to, I would encourage everyone to pull up their usdebtclock.org and just go through some of the stuff, right? And you look at the Medicare, Medicaid of $1.8 trillion of spending, and there's a lot of fat to cut there, right? And you know, my recent pet peeve is that none of these companies actually pay taxes either. Pfizer doesn't pay taxes. Obviously, Amgen has a huge lawsuit with the IRS about whether they pay taxes. These guys move segments offshore. I mean, a lot of these companies do. Ernst and Young, should go to jail for stealing from the American public for recommending offshore strategies. I mean, great for their clients, but they basically stole from you and I. And so I think they're going to cut a lot. Do I think that? I think that the cuts are going to be much harder than people think, right? If I take simple math of $36 trillion of debt, and you take the current interest rate, I'm not even, on the 2 year, it's 4.3. If I just take times four, that's almost $1.5 trillion. The problem here is that current interest expense is under $1 trillion, right? And so, yes, yes, they're going to start cutting. They're going to start cutting stuff, but interest expense is not going down. Until they start cutting entitlements and all that kind of stuff, I think it's going to be harder. So, I mean, my general view is I think that the next 4 years are probably going to be more difficult. And I actually think next year is probably going to be choppier than people think. If you just look at the simple, seasonality of election cycles, this year is obviously the last year is an excellent year because look how much spending the Democrats did, right? And I think as Trump tries to take cuts, one of the things that the main theme up until like midpoint of the year was, hey, uh, you can't fight these fiscal deficits, fiscal dominance. That was the whole thing. It's like, well, that's why the economy's been so good, is because the fiscal spending has been so massive. But everyone sort of thinks, hey, we're going to cut this stuff. We're going to go back towards a less of a deficit, but the GDP is going to accelerate too. It's like the magic bullet theorem, right? And so, I think that, you know, actually, I don't know if I'll put think. I think I know that Trump looks at the S&P as his indicator of how he's doing, right? Maybe I'm silly or off, but Lutnick, he was floating Lutnick as the Treasury Secretary, and they polled, Musk polled everyone on Twitter, and markets went down the last two days, and sure enough, Lutnick's not in the running for the Treasury Secretary, right? And so I sort of think that if he starts cutting too much fat, and you know, the employment numbers start to look a lot worse because there are a lot of federal employees, and if you start slashing, and the unemployment rate goes up 100 points, he's going to be like, no mas, we're done. We've cut enough. That's good. And so, listen. my point of this is that Trump's been given a horrendously bad hand, right? 36 trillion of debt, 7% budget deficits. That's just very, very hard to overcome. And if you look at our biggest position by far this year, in terms of sector, in terms of name, has been in gold and gold miners, right? And that's our view of, you take a barbell approach in our portfolio, and you have things that with certainty will happen, right? And if you call it financial repression or whatever it is, that's what's happening. And you've had a lot of central bank buying of this, and obviously it's reversed and we lightened up, but I just don't think this is a trend that's stopping. Actually, we lightened up going to the election. We someone was joking around, and I was joking around too, that yeah, I put a Texas hedge on or I put in terms of hedging my gold portfolio, I put a Texas hedge and bought Bitcoin at the same time. And so Bitcoin is sort of, I'm not sure if I'm definitely not a true believer, but um, you can see where that back to the juiced in part, right? Those guys are juiced in. Hard to fight that. And and on election night, I was sitting there buying Bitcoin, right? And so, you know, someone was on Twitter, going after me for my geo stuff, and he goes, You're um, you're trying to profit off of deportations, and you're having too much fun with this." I go, I don't know. I don't make the fucking rules. I just follow what's going on, right? And so to think that, like, any of us have any, besides Elon and four other people, have any power of what's going on is stupid, right? And so I don't know. I looked at it and said, these guys are juiced in. I don't. We're the America's greatest asset is the dollar, and the dollar's dominance. So to undermine that with doing with Bitcoin and stuff, I don't believe in. But whatever, it's the same trade as gold, and so um, I just think that's gonna happen, and I think that they're going to try to unwind QT, stop the QT at some point, and probably eventually do QE again. So
So that's actually a good transition to another question from YouTube. What is Porter's take on Treasuries, near term, midterm, 1 year out? I mean, if we're talking about cutting the deficit, I would think that's bullish for duration. But if anybody's noticed, rates haven't exactly gone down since the Fed cut rates.
I don't own any treasuries. I for the stupid way our brain works is that in, call it, 2016, I swapped out all of my savings in cash. All my cash equivalents I put to gold. And so I just think it's a better inflation hedge. Uh, I don't know. I forget the quote about the stealing from the elderly slowly. That's financial repression. Like, and so it's been a terrible asset class, treasuries have, over the past 5 years. I just think it'll continue to be a terrible asset class. That period of lower rates and the insanity that we had of negative rates, I just think that whole period's over. And it does look a lot like the 70s, where you had high inflation, came back down, and now it's reaccelerating again. So I would not own treasuries. Just, if you're a saver out there, I just don't think it's. And if you do, yeah, I think you go to the short end. You just don't get paid for taking 10 years of risk. And until Americans are willing to put a lot of their savings in the 10 year, like, that shows none, even the MAGA people don't believe it. They're buying Bitcoin. They're not buying. They don't believe. If they actually believed Elon, they would be buying the 10 year, but they're not. They're just not.
That's exactly right. You mentioned you thought next year would be choppy. We talking choppy like small caps the last several years, and is there a chance that small caps don't act choppy just because maybe they're long overdue?
Um, this is the area where a lot of people come on in the financial meeting. They're extremely confident about their views. I would say Vinny and I are extremely confident a couple times a year, where we see it, we take a fat pitch, and we're like, I have a lot of confidence in what I'm doing right now. The other time, it's you're playing probabilities, right? And you're seeing the data real time and adapting. With most of our long book, we try to take more than a 12-month view to not pay higher taxes, right? So, but I think in the near term, you have inflation. It's not a question of if it's reaccelerating. It's the question is how much, right? That's number one. So that means that the Fed's probably uh, going to be on hold. They'll probably do one more time because that's what the Fed does. But okay, if the Fed doesn't go on hold, I win with gold, right? I've won. I'm gonna and Bitcoin, and it's gonna keep ripping. Uh, Number three, valuations aren't cheap. I mean, look at pull up Microsoft, and the stock's done pretty poorly over the past year. You're just getting into the point where um, valuations aren't cheap. Look at Costco. Costco's, I don't know what the PE is, but it's like 40, 50, 60 times earnings. And so I don't know, does that stock just re-rate over, just still do, Costco's going to do great, but buying it here, there's no margin of safety. And so I kind of think that, that some of these things um, will have a tougher time. And then, bond proxies have done really well over the last 10 years. I just don't think that's going to, again, that's my view. I don't think that's going to happen. And, you know, maybe uh, further down that list is that right now the fixed income market is exhibiting zero stress. Financial conditions are as easy. Like Eisman used to use this line back in in '04 that the markets were so easy that even I could securitize my own stream of urine, right? And so like that's how easy the markets are right now. It's just there's no stress whatsoever.
Much to my
And
chagrin, by the way, because that's been my frustration. I myself built an approach that's oriented around tail events and stress, and I
yep,
never imagined following the fastest rate hike cycle in history, credit spreads would keep getting narrower. And
yep.
when you had these momentary glimpses of stress, like the reverse carry trade for 2 trading days, it immediately gets whack-a-moled right back down.
Look what happened in the yen, yen Volmageddon, or what the hell that was. Right? That was 2 days. You had to buy the fucking dip. The yen, the BOJ came out and we're just kidding. We're not doing that, right? And so it's been a very tough thing to fight. And I pointed this out. Luke Groman said it to me probably a decade ago that it's of national importance to keep the stock market up, right? And the stock market, that's where the spending come from, right? That the rich have made so much money and they're disproportionately so much more wealthy than everybody else, and they impact GDP so much more. So if you have a 25% drawdown in the stock market, of course GDP is going to fall. Of course the market's going to slow, and so if you start to think like that, and they, even the retail guys know you buy the fucking dip every time. So
Until it's a bigger dip, I guess is the
I,
question.
I agree. Listen, I've made my career off finding tail events,
Right,
right?
exactly.
And so I just think you gotta think about that. And I think that tail events happen both ways, right? Look back to my thing with Geo or with Fannie Mae. I was just paying probabilities of the stuff. And you know, if you start to do that, you build a portfolio of tail probability events, right? Even the stuff I'm shorting is that I don't know if I'm right, but if 95% of their earnings, which have been growing, their top line's been growing at 15% for the last 10 years, maybe that changes. Maybe Musk does do something, right? Maybe they do cut spending. Maybe they're not going to charge the government 90 grand for a bag of bolts anymore. So and so that's how we do stuff, and whether it's long or shorts, we start to put probabilities on things that can happen, and so that's how I think about the markets.
Speaking of career path, you said you made a career out of tail events. There's a question on X, maybe a little bit of a personal question, but worth asking. How did your time at Salisbury School shape your career path? I'm going to assume that somebody that maybe has gone there asking that
That's
question.
probably right. That's a loaded question, but just thinking about questioning narratives, right? And I think that that's the way that we sort of poke holes, and I never want to be part of consensus, right? And start to go around and say, hey, how could I be wrong? How could this guy be wrong? And so we do a lot of that, and I'm never gonna go around pitch a consensus trade. Just never gonna happen. I just, if it's a consensus trade, I won't be involved. And so I like fighting or arguing and trying to flush out what the truth is, what the right trade is, and whether I have good odds on it or not, right? If the odds are 50-50, I don't know, I just don't need to play. But if the odds are stacked in my favor, I'm going to swing hard, right? Or there's a huge, the 100-to-1 payout. Like you gotta, it's all sort of probabilities.
Speaking about consensus trades, there was a question here about uranium.
Yep.
I don't think we've ever talked about uranium. I don't know what your view is on it, but under a Trump administration, how do you think uranium behaves? And nuclear, obviously.
Um, I don't think that. I think that. I don't think that uranium is a consensus. I mean, a lot of people like it.
Mm.
I mean, have grown to like it over the last year. I mean, or it did well 2 years ago, I guess. Did well last year, and has not done well this year. So a couple of the names have been okay, but I go back to AI. Is Musk an AI? I'll ask you this question: Is Musk an AI guy?
When I was at the Gigafactory, they were talking about how the Optimus robots are going to be walking the factory in next year. So clearly,
Yeah.
yeah.
So, is Musk going to secure a long-term nuclear contract for his data centers? The answer is yes. Right. And so all these things, whether I believe it or not, and I don't care, I don't have a view, but they're spending on it. You can see, we have a spreadsheet, a dummy spreadsheet of tracking the top, CapEx spenders on this stuff and see what the rate of change is, right? Google's still spending $13 billion a quarter on CapEx. Amazon's more, and so they're going to keep spending. These things have an amazing appetite for energy. You can see it. One of our favorite. We don't like private investments, but one of our favorite private investments is a play on infrastructure. The build out of the grid, and the demand for this stuff, and this stuff is incredibly energy intensive, but also labor intensive in terms of building out machines and machine work and all that kind of stuff. And so I think it's not going to stop. And so I think that if you want your robots plugged in, if you want your cars plugged in at the same time, you want your data centers and you want your phone charged in and all that kind of stuff, and you do care a little bit about the world and the environment. Nuclear is the best way, and we've been saying this for a long, long time. But it's the best alternative, right? If you came down from Mars and say like, oh, these are my options of electrifying things or powering things, nuclear is easily the best option.
It's a good transition. Speaking about AI, from X here, another question. Thoughts on Nvidia and SMCI? SMCI, we see the shit show that's going on there. Any thoughts on the consensus trade of Nvidia?
Well, SMCI was, if you can't put out your financial statements, so there's something, element of fraud there, and I think there is, if you can't put out financial statements, there's something going on with the CFO. The CFO doesn't want to go to jail, right? The moment you write your name down on those, you sign your name, you're going to jail, right? And so obviously there was something going on. Nvidia is an interesting one, and I think I'll put myself as a bear because I actually short stocks, but I don't know if I'm bearish. But the people who short stocks obviously look at Nvidia and say there's going to be a great short idea here somewhere, and I don't know Nvidia well enough, and I haven't really gone through, but there is talk about there is an element of their earnings which are gain on sale, just like a financial stock, just like Enron. Eisman and I were short Enron back in the day on this thesis of the gain on sale accounting, and so if they do in fact have a lot of a fair amount of gain on sale and PVing of forward flow agreements and stuff like that, it'll be problematic. And so, and I also think there's going to be an alternative to Nvidia chips at some point. And so, would I be long that? No. Am I short it? No. Would I, if push come to shove, would I be short it? Probably. I think it's the largest market cap in the world. Like, I just, what do you, I just don't think there's a great long case right now.
But I guess the question is, I mean, I'm going to assume the answer is yes. Is it? I just had this conversation with a financial advisor. It seems like Nvidia now is too big to fail, kind of thing, right? I mean, given how important that one stock is.
Yeah, maybe. I mean, I don't have a strong opinion about it. I just, for me, I don't need to be long it, and so I'm not long it. But this is the problem with all the financial advisors, and the whole world is set up to be, long the S&P, right? And to be fair, the S&P has done great, and they've had fine rotating trades through it. But if you're not in Nvidia and you're underperforming the S&P, you have to answer to people, and so.
You go long, you go short. I don't think we've talked about how you determine your net position, if that's a conscious target you go after. How do you balance the opposing directions?
I've found, I mean, because I don't live in the institutional hedge fund world, and I think that people manage to a net. I think managing to a net is a horrendous idea.
I agree.
From an absolute, how can I make the most amount of dollars? If you have a good short position, put it on. If you have a good long position, put it on. If you don't have a good idea, take it off, right? And so that's how I think about things. And I think it naturally, it all comes from the micro, right? If you have a great bottom up idea, we're gonna buy it. And if the whole world is trend following right now, right? I think because of the influence of computers and it's much more trend following. And so we've always been trend followers, but in a different sense, that we follow fundamental trends. If the earnings trajectory is following a certain slope or a certain upward trajectory of earnings or EBITDA or revs, we're going to keep holding, or if we can find the inflection, we're going to buy for that inflection. If fundamentals start rolling over, in some ways, generally we're going to be selling the stock or shorting the stock, right? And so that's how we think about things, and whether that's right or not. I think that's the leading edge of a chart, right? Or sometimes the chart's the leading edge, who leading indicator, who knows? But so we do a combination of the two, of trend following, the chart also, but more so trend following the earnings trajectory.
to that point, I had put out a post which got a bit viral. I said, unpopular opinion, Trump will preside over a recession. I wonder what your thoughts are on the cycle.
Listen, we've had a long time without an official recession, and I think
Yeah.
you know if you look at at a lot of the building statistics, the construction statistics, we were in a recession in some way. I mean, you're going to probably know more about the lumber price and action than I do, but um, we went through some sort of recession already. But the fiscal stimulus was so much that we averted it. And so whether I think you call it a recession or not, I don't know, and I don't care. But I think that the piper is going to be paid somewhere, and the release valve is going to be somewhere, and I try to find that release valve, whatever that is. And so, official definitions of recession or growth rate, I don't know. I'm looking for the most asymmetric place that I can find it, and for me, that was. This year it was gold. It's been a fabulous trade, because you saw what the Democrats did to the deficit. I mean, the fact that it's $36 trillion right now is outrageous. We put in $1 trillion in the past 3.5 months, and so I think the piper is going to be paid. Again, back to Trump's hand. He's dealt a horrendous hand, and he's probably our best option because you know the way we were doing things was just not right. And so I think we're going to go back to it and now have a pretty good opportunity to fix things. But from what level, I don't know.
Speaking of asymmetric trades, any thoughts on oil maybe having one of those, fabled super spikes, right? That some geopolitical tension or dynamic suddenly makes that skyrocket. I mean, every single time it looks like war is about to accelerate and get bigger, it doesn't happen. Oil gets knocked down. Any sort of tail potential there?
Well, okay, go back to the juiced in concept and the UFC fight. You had the Saudis sitting next to Trump at the UFC fight. Like, what the fuck? Like, and you have to ask yourself, why, what's going on here? And I personally think, and I don't hold me to it, but I think that they're gonna crush the Iranian output and let everyone else pump. And because the Saudis can't take $60 oil. I mean, they can, but not with their spending initiatives. And so I think for the world's sake, $65 to $80 oil is hunky dory. And so I think that he's going to keep it that way. He's going to allow, the Saudis to increase production, potentially the Russians to increase production, and he's going to take I think it's 3.5 million barrels a day from Iran back down to, I think it was like a half. Anyway, it was a lot lower, under the Trump one. And honestly, one of the worst geopolitical moves by the Biden administration was to allow Iran to do what they did. Right. And they were all doing it for the sake of lower oil prices too. Right. You can see how politicized lower oil is. And so, but I think that the lower end is, call it 65. That's my view. And we own, and I've said this before, but Petrobras has been a decent sized position for us. I get paid almost 20% to wait for either an unbelievable find in the equatorial margin in near Guyana, or the increased production was coming, or stock that trades at the cheapest valuation of, I think, any oil company in the world. So
Say a few more good questions here. Whatever happened to that commercial real estate crisis everyone was talking about? 900 plus billion in commercial real estate coming due November, December. Large portfolio dumping. It's been very well publicized, so it's probably priced in. But what's the potential there of CRE becoming a big problem?
there's been, again, the capital markets are so open
Yep.
that that people have been able to, and time is obviously, if you get like you did in the GFC where everyone pulls their money at the same time, it doesn't work, right? And so banks allowing time, right? That's one of the best parts that a bank can do, is the bank can give them more rope as the world turns to more private credit. I don't think the private credit has that same rope. They're not as benevolent, and so that's going to be an interesting, whenever that cycle turns, is they're just going to take the companies from them, right? And so, but the banks don't come in and they're not stealing your company from you. They just want their effing money back, right? And so, uh, the elongation of that CRE cycle is allowed that to play out. And so that's what I think. And listen, you've had quietly a lot of calamities in that sector. They just haven't been as big, and time rolls on and all kind of stuff. So, and the economy's, to be fair, has been fine, but the office space is still a mess. No doubt about that.
Is there an opportunity for value there on the office side?
No, I just, that's not kind of where I'm hunting right now. I just, you know, the there will be another cycle, but I think that inflation's sort of bottomed and reaccelerating. So again, I don't want any part of that, right? I'd rather short real estate if I could here, but I'm not, except for a couple one-offs.
Uh, Porter, I know you do a lot of media and content, but for those who want to track more of your thoughts, where would you point them to?
I'm on Twitter fair amount at Seawolfcap, and my partner is Vincent Daniel and VD718, and so that's where you can that's where I like messing around the most. And I don't. We have a letter that we send out to some of our friends and family 2 times a year, which is a way for us to verbalize some of our thoughts and put them on paper. I think that's just been very helpful for us. Usually some sort of joke or something like that we mess around with, or mobster reference or something like that. But a lot of
I
Rocky
remember that one. You
themes.
sent me that one. That was a very
Yeah,
well written one.
that was very that's the new. The funny thing is that was in 2022. No easy way out,
Yeah, easy way
right?
out. That's right.
No easy way out. And so that is, um that's shown to be exactly right. There's no easy way out of this debt, right? And it's actually gotten worse. And so, again, take 4% times, $36 trillion of debt. That's another $500 billion of interest expense that's going to go up from here. So, Elon's magic $2 trillion, it's got to be 2.5 trillion, right? So, again, no easy way out.
Appreciate those that watch this live. I have another interview scheduled in a few hours. Hopefully, I'll see you all tuning into that. Please make sure you follow Porter Collins on X, and I will see you all in the next episode. Thank you, Porter. Appreciate it.